just in case. Okay, now I share my screen. Okay.
Opa.
The recording works for you?
I'm recording with OBS.
Okay.
It's just recording my screen. So we'll start with the basic. This is TradingView, this website that I want everybody to have and understand how to use. It's the website that allows you to see the charts, see the price action. Okay, so right now I'm on the chart of Bitcoin on that website on Bitstamp. If you want uh, Bitcoin on the price on other exchange, you obviously all the exchanges here, right? If you want to buy Tesla, you put Tesla, and it tells you here Tesla in the Nasdaq, okay? And it works for everything. So
Mm-hmm.
I will just use Bitcoin for like the
So record it, please, because I cannot see
I
the
am.
view.
Okay.
Okay, thanks.
So we will discuss a bunch of stuff, but right now I just want to introduce you to this website. Okay, so I gave you a link to have your own account. So basically, when you log in here, this is TradingView. Okay, and you create your account, and you have to create an account. It's free, but it will let you do everything you need to do right now. Okay, so this is the best. This is the best website for this, and this is what you need to use. And I will tell you how to use it. I will tell you everything about it. Um, okay, so let's get started. Give me 1 second. I want to show you. Okay, I'm not showing the right screen, I think. Oh, 1 second. There we go. Okay. I just make sure you're seeing the right thing. Yeah, perfect. Okay, so we start with the basic. This is Bitcoin since 2010 to today when it was 1 cent, and now it's $83,000 today. Okay, so this is the price going up, obviously, for the last 12 years. And hold on, someone is making a lot of noise on the. Can you mute yourself? I don't know who is making noise. Thank you. If you can mute yourself.
Me?
Maybe. Yeah, I don't know. You or Danny. If you can.
No, I'm in silence.
Okay. So if there is noise, you mute, and if you want to talk, you just unmute. Okay, so this website, this is TradingView. So I'm just gonna cover very much the basic, how to use it, and the basic of price and concept. We will introduce a few ideas on what to look for, what to observe. Okay. So right now, the first thing you need to understand is this is the price of Bitcoin from zero to almost $100,000. Okay. So right now, you can play like this with the price on the side. You click, and you can play like this. You can also play with the time. Okay. So I customized my trading view where I put a black background and the candle white and red, but it's always the same. For you, when you start your account, it's gonna be a white background and the candle are gonna be green and red. Okay, I just made it mine a little more dark. And so this is the price. In my case, white means up, was a good month because every candle is 1 month. You see here, this is your time. Day, 3-day, weekly, 2 weeks, 1 month. You can go all the way up to 2 months, 3 months, 6 months, 12 months, okay? So I can do 12 months like this. Now it's 12 months. Each candle, we call these candles, is what happened after 12 months. So the bottom of this candle is where the year started. You see at the bottom here, it says January 1st on Monday 2024. The candle opened at the bottom, 1 year happened, and it closed here December 31st of the next year. Okay, so this is 1 year. And we will see a lot of things can happen within 1 year, right? Like you will understand, within that candle, it looks like it went up, but maybe inside, it went like, okay? So maybe inside of this candle that went up 120%, you can see it here, you see? Where I have my arrow. If you click on the candle, it says 120%. Inside of that candle that was up 120% after 1 year, after 12 months, it's possible that there was a 40 or 50 or 70% crash inside of it. It just means we started here, we closed here, but you cannot know what's inside, okay? And so this is 1 year, 1 year, 1 year, 1 year, 1 year, 1 year. Now you can zoom in. This is 1 month, 1 month, 1 month, 1 month, okay? So in our case, you can see the 1 year, January 21st, started here, okay? So all of this, the yellow circle now, is everything that happened within that big 120% yearly candle I just showed you, right? This, you understand, this is 12 months. So this is 12 candles. The 12 candles inside this candle. You understand? Easy, right? Very simple. You see that one big candle divided in 12. So now you understand that, okay, it went up 120%, but inside there was like 6 or 7 months where we did like this, right? Nothing happened, and actually we went down, right? We went all the way from 74 to 48. There was a little crash this year. Right here, boom, we lost 32%. You can only see it if you zoom in on the monthly, right? And so forth. This big candle here, 43% in the 1 month. If you zoom in, you're also gonna see price doing whatever he wants to do. Okay? So that's one concept. Now that you understand that, you need to know what you're looking at. Because, okay, this is different Bitcoin. There we go, still Bitcoin. So like, if I show you this, and I don't tell you what type of candle it is, you have no idea what type of candle it is. I can show you this, or I can show you this. It's always candles, up, down, up, down, up, down. It's just candles. You have no idea if this is a 1 minute, a 1 second, a 1 day, a weekly, a 2 week, a 1 month, a 12 months. You have to know what you're looking at. Okay, so the good practice is usually you start by the bigger one and then you zoom in. Okay, you zoom in. So now I come back to the 12 months. And so, okay, it looks like it went up a lot, right? And this was flat. It looks like all of this was like nothing happened for 7 years, right? It looks like nothing happened since 2009 to 2016. Nothing happened, and then it started going up in 2017. But now you have to understand something else, is that this price here on the right, 10,000, 20,000, whatever, is what we call like regular price. It's simple price. You know, it goes from 1 to 2 to 100,000. You can put a different mode. You see, this is regular. You can put a different mode, which is called logarithmic. So on the regular, it goes up every 10,000, right? It's regular. 10,000 is the same gap, 20,000, same gap, 20,000. It's a regular scale. If I go on the logarithmic scale, it's a different chart. It's a different look. It's the same chart, but it's the different look. In this in this one, the difference is that now we go on base 10. So it's the same gap between 1 to 10, the same gap 10 to 100, 100 to 1,000. So we keep, instead of going plus 1, we go times 10. So now you understand how here on the regular, it looks like we didn't go up for 7 years. But the truth is, on the logarithmic, the first 7 years is where we went up the most. You see the difference? 2017 is this one. Okay? So look how much we went up before 2017. Crazy, the biggest. Right? If I look the numbers, we went up actually 146,240,000%. But then on the regular, 146 million% looks like zero. Looks like it didn't go up. You understand? Yes, no, question?
Yes.
You can unmute. Everybody can unmute. Don't be shy. If you don't understand, I can explain differently. I can explain again. Maybe I use a different English you don't know, finance words. Maybe
I didn't understand why the price didn't change, but the logarithm said.
Okay. No problem. I'm glad you asked. Maybe I have a French accent that's too strong. Maybe I go too fast. I'm glad you asked. So I'm gonna show you I'm gonna explain to you differently. So now, when I click twice here on the price, you see I can do this. If I click twice, it do automatic. So I'm gonna do automatic, and I'm gonna go on the monthly, and you're gonna understand now. I'm going on the monthly, and I'm going all the way to the beginning, and I'm gonna do something special. I'm gonna remove 2 days price. All of this, I'm gonna remove it. I'm gonna go on the right. I'm gonna scroll. Okay, and you see it's automatic. So now, there we go. Now you see, when you remove the future, now you see the scale adjusting automatically. And now you see, okay, we started at 0 and we went to 1 cent. Okay, and then you start moving like this. Okay, now we went from 1 cent to 7 cents. Okay, so now this is a...
בדיוק. Sorry that I'm disturbing חוויר, but ההסבר הפשוט זה שזה פשוט העלייה באחוזים הייתה גבוהה ולא בכסף. זאת אומרת שבכסף העלייה שכאילו שווה מ10,000 ל20,000 הייתה בעתיד, אבל בהתחלה העליות באחוזים לעומת השווי היו הרבה יותר גדולות.
Can someone translate?
כאילו מהשווי הראשוני?
That makes sense. Yes.
Okay.
It's basically explaining the way that, like, it's not the absolute number. That's the thing. The absolute number has been not relevant, not seen in the graph, because the absolute number is going in scales of 10K, which is not relevant for the first 7 years. So yes, the explanation of Shitrit was correct. Thanks, Shitrit, for explaining it.
Perfect. I'm glad you explained it. So, but I just want to show you a little trick, because this is going to help us in the future. So I still want to explain, because Ido actually asked a question that allows me to do a good transition. So what I want to explain to you is like, okay, now this was 1,000% candle. We went from 1 cent to 10 cents. Okay, this is huge. And it makes you believe, oh, it's too late to buy. It's too late to buy, it went up too much. I'm not buying after 1,000%, I'm gonna lose my money, right? But then you keep going, this looks like crazy, right? This looks like a huge candle, right? And then you keep going, and now the big candle looks small, because there is another big candle. And then you keep going, going. It's like, oh, it's too late to buy. I missed Bitcoin at 1 cent, now it's $1, it's too late to buy. It went at 100x. Okay, this is $1. And then now it's, like what looked scary, because visually it looks scary, like, it does look scary here visually. But then if you keep going, the scary becomes flat. Okay, you keep going. Now it's $3. Oh my God. I could have bought at $1 when it looks scary. I would have tripled my money. Too late to buy, really too late this time. And then, now it's $9. Right? And you keep going and you see on the left, it becomes flat, and on the right, it becomes more and more high. Okay? And then here we have what we call the first downtrend. Okay, so all of this is an uptrend, and this is a downtrend, local downtrend. We went from 1 cent to $32 back to $1. So if you bought at $32 here, now you were bad because you lost 93% of your money if you sell, okay? And then we do this little thing, and then you see we keep going, and now it's $100 and it looks crazy and you missed it, okay? And then actually we keep going, and then you understand how visually it becomes scary. Now you have this huge candle to 1,000, okay? Now you have what we call a downtrend, where we go from 1,000 to 100, and you lost 97% of your money. But now we have something interesting. It's like here you lost 93% of your money, and here you lost 97% of your money if you each time buy the top. Okay? But now I'm gonna introduce you another concept. Again, here, after losing 90% again, we went up a lot. Okay, and what happened here? You again lost 80% of your money. Okay? And again and again. Here also 90%.
Sadly, I have a question.
Yeah.
What do you mean I lost or gained? Like from what number? From what number do you talking about?
We were looking at Bitcoin from 32 to 1, or for 1,200 to 100, or from 20,000 to 3,000. Every time Bitcoin lost 80%. So, but I don't care about Bitcoin. I'm just using Bitcoin as an example to teach you concepts, okay? I mean, I care about Bitcoin, but I'm not telling you, I'm just using the graphic of Bitcoin to tell you concept, because Bitcoin is very useful because it's trading 24/7. The stock market is trading only 5 days a week, only 5 hours a day. It's very slow. The stock market is very big. It takes a lot of money to move the price. Okay, when Apple is $1 trillion, to make it a $2 trillion, it takes a lot of time and a lot of money. Whereas Bitcoin at the very beginning, it started at 0. So it's easy for something to at 0 to go to 1 million, and to go to 10 million, and to go to 100 million. Okay, now, that's why I'm using Bitcoin, because it's trading 24/7 and it goes very fast in terms of the market cycles. You have to understand concepts that are market cycles, and that's what I'm trying to tell you now. So now you see that Bitcoin, just from 2010 to 2017, 3 times already, it crashed 83% or 85% or even 90%. But something that you must notice is that every time it crashed, the crash was higher than where it came from, right? So here you see, for instance, the real pump started like on this candle, right? And this crash, we didn't crash all the way back down. We did what we call a higher low. Okay, I'm gonna put it here. Higher low. Okay. Again, we go up, we go up, we go up. We crash. What do you see? We crashed all the way to 160. So yeah, you lost 90% of your value, of your portfolio, of your net worth. But you are back at 170, which is, another higher low. Right? And in the meantime, guess what happened? You actually made here a higher high. Okay? And after we crashed 90%, but still didn't crash to 0, we crashed to a higher low. After making a higher high, we have made another higher high. Okay? And now you see it. So I'm gonna go here and do a design, and this is a concept you guys need to understand. First of all, the basic is that a trend is a succession of higher highs and higher lows. Okay? And you have what we call a trend, like this. Good. Now, this is an uptrend, or what we call an uptrend or a bull run. The bull, I don't know if you know about this. I assume some of you know, some of you don't know. Again, I'm gonna do very simple, the basic. An uptrend is a bull run. When we see a bull is good, bull is up. That's why in Wall Street, they have the bull in front of Wall Street, the big bull with the big balls, right? In Miami also, they have the crypto bull, right? For the crypto. It's always like it's a tech bull. It's like a robot bull. Okay, bull is good. Bull means up. Bear, when it's a bear, it's bearish, it's a bear trend, it's a bear market, it means down. The bulls are in power or the bears are in power. Okay, so this is a bull trend. And you have a downtrend, which is the opposite. Okay, which is lower lows and lower highs. Here it bounces, but it doesn't bounce as high as this. Okay, we call it lower high. And this is lower, no, not this one. Actually, this is the lower low. Okay, so this is the basic. Now, something else you need to understand is, wait, any question, any comments? Is it okay? This is simple. If this is not understood, tell me now. Okay, looks like everybody is understanding it. Okay, so now another concept is, I'm gonna clean it up. If everybody understood, I can clean up everything. You have the concept of support and resistance. This is also very, very basic, but basically what you need to understand is, for example here, the price went from all the way to 20,000 and not more. Okay, so you have to pay attention to this level, the maximum and the minimum. Okay, so you can put a line here and you call it resistance because it's the maximum. It was where the price didn't go above the resistance. Okay, and then you can also do the same here at the bottom for support. Okay, this is a very interesting concept, a very important concept for you to understand, because these levels are very meaningful. They are not random and they always come back and always come back. Okay, so now you can zoom in on the daily. Coming up. Okay, and you see, for example, that I put the support of the crash here, but now that I go on the daily, you see that this level, if I go back here again, I'll show you. I randomly put the level here, right? But then you realize there was a lot of interaction here. Okay, back in the past and in the future, because the level is important no matter what. I'm gonna try to teach you how to trade like meta trading, like metaphysic. Okay, this is metaphysic concept, but it works. You see how here, oops, okay, wait, perfect. Here we had this uptrend and you have this level here. You see, that's way in the past. Perfect support, perfect retest, and then we went up from here. So after the crash, the price decided to go back to the same level, the same price, the same level. Okay, and look, in the future, this resistance, obviously this is the highest point, so nothing happened in the past. But if you look in the future, look at that. 20,000 resistance in 2017 become the 20,000 resistance in 2020. You see how the price is stuck exactly on the same dollar. It's stuck. It cannot go past. It retrace until it can go past and it destroy it. Okay? And then after it destroy it, we're good. We go way above. Okay? And then actually look at that. This is 2017. It's meaningful again in 2020, 3 years later. Then we destroy it. We go at 70,000. Where do we crash? Exactly to this level again in 2022. You understand how a price from 2017 is meaningful in 2020 and in 2022? Exactly here. Look. Support, bounce, support, bounce, support, bounce, support, bounce. Exactly support, bounce. Very good price. And then something happened with I don't know if you know the hack or whatever. Little trap. We call it a trap. Everything below was here to scare you. And then look at this. We come back. We reclaim. We go above. Again, boom. Look at this. Beautiful. Do you realize how beautiful this is? This is magic. This is the best time to buy it. This one. Okay? And then from here, 20,000 to 100,000, never looking back. Okay. So now I want to tell you about this because this is very important. If, let's say, I come back to here, okay, in the past, look, I can play with this. Let's have fun. So here, the price on this first pump of Bitcoin in 2011 went all the way here. So this is an exercise that I want you to do at home. Homework. This is homework for next class. You go on your trading view, on your free account. You can also do that. You know, it's this one. You take this horizontal line and you go on whatever you want. You go on Tesla, you go on Google, you go on Microsoft, and you do like this. You do the lines. I want to see the lines. Okay, so here, I'll do it with you for an example for Bitcoin, but then this is your homework. You do it on everything you want and many things. I want you to do it on 20 charts. You find 20 stocks and you do it. Okay, so I do the first one with you right now as a practice. So right now, Bitcoin went to $31. I put a line. That's it. Zero. Now I go in the future. And then here it went to 266. That was the max. I put a line. Then it went.
I'm sorry. How do you do the lines? Where are you pushing?
Here, horizontal. Here, on the left. I will teach you how to use
Yeah.
everything that's here. But the line is the line is the second one. The line is the second one on the menu, and you click on the little arrow here, and it gives you the sub menu, and you do horizontal line. Okay, or horizontal array, whatever. You can do horizontal line, and then you have the magnet here. The magnet here at the bottom is to make sure you click at the right place. You know, like for instance, if you want to make perfect, now you have no control. It's your finger. If you magnet, it will go on the price. It will go exactly where it has to go. Okay. So I use the magnet because I want to be precise. We can't mess with the precision. It's very important to be precise. So then I go all the way here, up, okay? And then I keep going, up, I keep going. Then we went all the way here, and then you keep going. Then we went all the way here, okay? And now we're here. So now I have all these lines. All these lines are only the resistance, okay? I didn't do support. I only did resistance, right? Well, look at what happened. This resistance automatically became the support after, okay? This resistance became more or less the support after. This resistance also became resistance after again, right? And then this resistance became resistance again, and it became the support. Okay, and this resistance also became resistance here, and maybe we're gonna go back now at 70K. Who knows? Who knows how we end up?
So when it comes to the line again, you know that from here you have most of the percentage. It will go up.
This is smart. Yes, this is a good remark. So basically, it's what we call S R flip. Wow, it's very hard on the SR flip. Okay, SR flip is a support resistance flip, and when you observe this, it's very good usually. I can show you on every chart is the same. Okay, let's go on Tesla. You see how Tesla went, up from $1 to $25. Okay, if I put a line here at $25, where did it go after? It went to 60. You see this? Look at that. Tesla all the way to $64. It crashed because of COVID from 64 to 25. Where did it go? To 25. The orange line that we put right here. Okay, I put the line here. That was the top. The resistance is the top. Okay. Oh, I can do another one here. Before that, we had this top here at 19, right? So we went to from whatever 0 to 19, and then it breaks. You see, it can't break here. It can't break here, and then it managed to break. It goes to 25. New resistance. The old resistance becomes supports. Look, resistance once here, little retrace, back to 25. Exactly the same price. Resistance again, second time. Now rejection all the way to 25 here, the previous resistance. This is SR flip. And sometimes are stronger than others, right? The more you test a level, the weaker it becomes. So now we have a range here. It's called a range. It's between 20 and 25. We have a range. We went a little bit below the range. We reclaim. We come back to 25 again, resistance. Now 3 times 25 is resistance. Now we come back here. Actually, look at this. If I put the line here, that was the top, right? At the time, actually 17 was the top, right? And even before that, look at this one. 12 was the top, right? So 12, we break it. 17. Where do we come back? 12. You see that? Resistance, we break. Next resistance, the previous resistance becomes support. Simply put, today's high is tomorrow's low. Today's high is tomorrow's low. You see that? Resistance becomes support. Resistance. Here, support again. Okay. Support again. Okay. Resistance. Resistance. We break it. New resistance. Previous resistance becomes support. Oh, we need to go lower. Okay, we go to this one. Becomes support. Becomes support. We keep going. Oh, now we have a sell-off. Now we have a bad news. We have something that happened. We go all the way down. This is a crash. Oh, guess what? We came back to that resistance. Boom. Becomes support like it was here. Right? Support, resistance. These are key levels of price. 1297, 1767, 1943, 2580. Key area. Now we break because we tried once, twice, 3 times, 4 times. Yalla, it's time. Boom. 25 breaks. Yalla, big run. 3x, 25 to 70. COVID crash. Become support. Nahan? Okay. You understand? And then you can keep going and you can keep doing it and doing it. Okay? And it's very important to have these levels identified. Another way to think of this is, again, you could start with you start with the big view and then you zoom in. Okay? So this leads me to another little conversation, and maybe we stop because we already covered good topics. But what I want to show you is, okay, hold on. I'm gonna clean this, remove everything. Now I want to tell you about what I tell you in what we discussed in text the other day. So when we look at this, when we look at price, regardless of what it is we're looking at, it could be oil, it could be Tesla, it could be gold, it could be Bitcoin, it could be Apple, it could be Microsoft, it could be whatever. When you look at the price, this is the price. We call it technical analysis. What we are doing right now is technical analysis or TA. This is TA. We are doing TA right now. We are doing technical analysis. We are studying price. Okay? This is the opposite of doing FA. FA is fundamental analysis. What's the fundamental? The fundamental is really the value of the business. Who's the CEO? Which country? How much money are they making? Are they doing a profit? Are they doing revenue? Where are they distributing? What's the politic involved in that thing, right? Tesla is electric cars. At some point, everybody wanted electric cars. Okay, you understand? Like, oh, we give you credit if you buy electric cars. All of this, all the news, all the information, all the things about the business, it's fundamental analysis. And of course, both are important. Which one is the most important? I can't tell you. I can tell you that if you do fundamental analysis without technical analysis, it's gonna be hard. And if you only do technical analysis, you're gonna be okay, but you're gonna be even better if you have understanding of the fundamental analysis. Okay? I know people who just trade the chart and who just trade the price and they don't care about who and what and how and when. And just the price, they can be good and they make money and they made millions. Because the price has all the information. I'll tell you why later. But for you and at our level, it's good to have an understanding of both and to keep both in our analysis. You need all of this. And you need more than that. You also need sentiment. You also need, I will explain all of this later, right? I just want to introduce new words and new terms and new ideas, and don't worry, we will, it's all of this is very simple, and we will discuss in details how to become good at everything. Okay? And it's not gonna take so long. Okay? So don't be scared. Come back next week. I believe in you. Okay? So for instance, now that we introduce TA and FA, you understand how the price over a long time on Tesla, if I go on logarithmic, okay, so logarithmic, remember, base 10. So it allows you to see like when it was the beginning, especially. So you see Tesla over since 2010, in 15 years, Tesla has been trading on the stock market for 15 years. Tesla in 15 years, up. Can, right? If you zoom out, and each candle is 1 year, and you don't care about what happened inside of that 1 year candle, okay, remember? After 15 years, it's up, which means the FA is good, the fundamentals is good, the value is good. Okay, the value. Remember I told you the price and the value are two different things. So the value is the fundamental. Is the company gonna change the world? Is the company gonna have adoption? Is everyone having a Tesla? Is everyone having an iPhone? Is everyone buying Bitcoin? This is fundamental. And so the fundamental influence the value. And so the value is good after 15 years, non-stop good, only good, very good, only up. Okay? Now, the price is what happened when you zoom in. So now I go on the weekly. Okay, each candle now is 1 week. Okay, we're very, very zoomed in. Right now you have 56 weeks per year. So inside of each 1 year candle, you actually have 56 candles. Okay, you understand, right? And now you see what? You see, it didn't go only up. It goes up and to the right, but inside of that, really, yeah, here, it lost 50%. Here, it lost 50%. Here, it lost 55%. Here, it lost 62%. Here, it lost 75%. Right? This is price. This is technical analysis. This is not fundamental. Of course, it can happen because it's fundamental. Something happened locally at a given day or a given time that made people panic. For example, here, I remember like it was yesterday. This crash, where is it? Hold on. One of these crash here, one of these, this one, Tesla lost 12% in 1 week. You know why? Because Elon Musk went on the Joe Rogan podcast and he smoked weed. And this is why it crashed here. It lost 12% in 1 day because the CEO smoked a joint on TV, okay, on the radio. Okay, this is ridiculous, okay, but this is what we call price action and technical analysis and the news, okay? But here, what do you notice though? Every time we crashed, what do we do? Okay. Can someone answer? What do we do every time we crashed?
Dollar cost average.
No. How do you call it?
buy more.
Every time it crashed, we did higher lows. Come on. Yes or not? Here, this crash, 920. This crash, 1172. This crash, 23. Higher lows. We call it an uptrend. Yeah? Okay. And so that's why when you zoom out, it looks like this. Up. Because when you zoom in, even though here, look at that. This candle, remember, we open here the year, we close here the year. Inside, it's another business. You have to zoom in on and change the time. Okay, now for the red is the opposite. The red means you started here at 380 and you finish the year here at 123. This is 1 year where Tesla lost 65%. Okay, so you understand the opposite here. You start here and you finish here. And red is the opposite, obviously. You start here and it's red, you finish here. Okay, so now, I don't know if you guys have questions so far. Good. Danny, good.
Yeah, I'm good.
Oh, Nahi joined the
No,
chat.
it's all.
Nahi, good. Okay. Oh, look at that.
Nothing, very good, man. This is a masterclass. Thank you.
Uri is here. Okay, good. So do you guys want to continue? How do you feel? Continue a little bit? One more concept or we take a break?
Yeah, one more.
One more? Okay.
Okay.
Okay, so I'll go back to Bitcoin to finish this idea. Okay, this is Bitcoin on the monthly, on the regular price. So I want to show you a couple of the things. Here at the bottom, these candles, these bars at the candle is the volume. Okay. So you see, goes up, goes down. Sometimes there is like huge burst. Okay. And and there is patterns that you can identify. We will talk about this later, but for now I just want to tell you what it is. It's the volume. The volume at a given time, right? So if it's a daily, it's the volume of that day. If you're on the weekly, it's the volume of that week. Okay, very simple. If it's the monthly, the volume of that month. Now, I want to show you just one thing, very simple. Where is it? Here. Come on. Why isn't it opening? One sec. My website is broken. There we go. I want to introduce you to one concept. Which is the moving average. So I added a line. Okay, I'm gonna make it wide so you see it better. Okay, here. Okay, so you see this line. What is this line? Do you see you good? Should I change color? Yellow is good? Yeah, yellow is good. Okay, so this line is what we call a moving average. So it's doing the average of the price over a period of time. So it allows you to kind of smoothen the noise of the price. So now that you have this average, you can clearly see trends. You can see trends better. You see here where the price is above the line, above the moving average, above the yellow line, we have an uptrend. And sometimes, actually almost all the time, we always use this line as support. Remember we talked about support, horizontal support, support and resistance, horizontal. You also have diagonal and moving average. So moving average, you see here, we go up, we retest it. It's good, we're still up. We use it as support, we keep going up, we retest it here, we keep going, we retest it here, we keep going, and then we break. We break, now we go below. This is a downtrend now, okay? Until we come back above it. We come back above it, we go up, we retest it, all good. We go up, we retest it, perfect. You see, this is very good. And then we keep going up, we retest it, again, we go below. We go below, and then it stops going up. Basically, it's very simple, it's very stupid. You cannot be going up if you can't be above the yellow line, okay? Until you go back above the yellow line, and this is your signal. Good. You could use this as an indicator for, are you in a bull market? Okay? Because this is a very good price to buy here, but how do you know it's not gonna go to here? How do you know it's not gonna go to here? You're buying on the way down, but maybe you're gonna be destroyed.
So if I understand, sorry, if we are above the average line, there is some buyers that they are in.
Exactly. And it's also for you better odds that we are in a good trend, in an uptrend. And also it's good for you to manage your risk, because look, if you buy here, you can get fucked because you don't know how low it's gonna go. But if you buy here, you have a confirmation, you have a signal. Hey, we managed to reclaim and to go above the average. And so you could enter here, and your system can tell you, hey, this is why I enter. I enter because we came above the moving average, and I'm bullish because it's a bull trend above the moving average. And maybe I'm gonna be wrong, but this is my setup. I think this is a signal, and so if the price comes back below, I sell, I take a loss, I don't care, I lose 5%, 10%, 15%, but I don't want to be inside of this, because if we go below, maybe we go to zero. I don't want it. So I'm waiting. You know, yes, $300 here is not as good as $120 here. Yeah, it's 2 times more expensive. But at least you don't wait almost a year to know if it was good or not good, whatever. You don't need to have money in something that's going down for a year. What you need is you pay a little premium, you pay a little fee, you pay a little 80% fee. You buy Bitcoin at 300 instead of 200. But now you have a secure system that you know why you got in. Because you had a signal, not because it was cheap. Because who cares it's cheap for 1 year? Your money is cheap and it doesn't do anything for 1 year. Whereas here, look at what happened. You buy here and you go up right away. No time. No, you waste your time for 1 year. Now it's like literally up only for 2 years, 3 years, 2 years. For 2 years, you bought instantly up, non-stop for 2 years, up. Okay? And look what happened. We retest, we go up. 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 We retest, yeah, we go down. And now it's down. You could sell here. Okay, so now what I'm proposing you in this strategy is that yes, you're not buying the bottom and you're not selling the top. But guess what? Nobody does that. Nobody buys the bottom and sells the top. However, in this strategy, you buy just before it goes up a lot and you sell when it's done going up. It's still 25x, 2,500%. You understand now? You eat the meat. You don't scrap the bones. I know we love to eat the aval here. You have a strategy where you buy, it's already up, and you know when you sell, and then you don't have to be part of this bullshit. Ken?
Not to be too greedy, you mean?
Exactly. And here, you see, we cannot go up. Now we use it as resistance. You see here how this becomes resistance? We can't go up, we go down. And then boom, this is actually minus 50%. 60%. From the top, 84%. But from where you sold, 50%. So this signal tell you, hey, maybe you should sell because we can't go up anymore. It used to be support. Now it's not support, it's resistance. You sell, you save yourself from losing 58%. And then when do you buy back? Here. We come back up. You see? We come back inside. This is good. You buy here. And then what happened? We go all the way here. Okay. This is not good. This is fake. This is COVID. And then, okay, maybe you don't know what you do here. Maybe you're in, you're out, you come back in, you come back out. You don't know. Okay, and here what happened? We reclaim. This time again, boom. Very good. 8,000. 8,000 all the way. We broke here. Or here. 42,000. Okay, good. You buy here. I'm giving you examples, right? And you sell here. Another 5x. Okay, and then you don't do all of this bullshit. All of this bullshit you don't do. You sold here, right? And then look what happened. Here. It's trying. No. Resistance. Trying again. No. Resistance. This time is a good one. Boom. Retest. Buy. 26,000 you buy. Okay? So if you know me since 2 years ago, I told everybody to buy at 20,000. And look what happened. We're up for now. And look. Retest. Boom. Retest. Perfect. Boom. And now, oh, very dangerous because of what's happening right now. Support. And now, not good. But keep in mind one thing is that this is a chart with 2 weeks candle. And now there is 7 days, it tells you here, 7 days left. You should never take for granted until it's finished. Okay, so right now on the monthly, there is 24 days left. Okay, and of course the moving average will go based on the time frame you're on. So right now I move to the monthly, so you see it's a little different pattern, a little different look. Okay? And here, the monthly has 24 days. And so if you wanted, it can go all the way here to 68. And it's still good. You understand? It's still good at 68. Actually, it would be amazing at 68. Why? Why is it amazing at 68? Because look at this. Look at this. Boom. The previous resistance is the support. And it's the moving average. I would personally buy Bitcoin at 68 if we have it. You know? And then if we go below at 62, it was not good. Sell it. You understand? Because of the moving average. And now final thing. You have what we call, I told you earlier, trends. And so I showed you the support and resistance. I showed you the moving average. I want to show you trends. So I'm gonna go here. And I'm gonna give you one example. Let me remove the yellow line. It's messing up with me right now. So the most important and the most simple at the same time. Price can do only two things. It goes up or it goes down. That's it. You're lucky. It's very simple. Price goes up, price goes down. Sometime in between, it just does what we call a flag. Okay? So a flag is kind of like this. Is where it's not sure if it wants to go up or go down, and it's deciding, right? So I'm gonna show you. Sometime price goes up and then it oscillates. It doesn't know if it's gonna go up or down again. And then it wants to go up more. And then zero again. And then up. And then whatever. You never know. You have a way to know, but you never know for sure. Okay? This time down. Okay? This time down. Okay? So it only goes up and down, and sometimes it's in between. Okay? And so this part, we call it a wave or a flag. By wave, it's not only because it's doing the wave like you surf on the wave, it's also because it's a shock wave. And this is important for you to understand. It's like a shock wave, like when you do, when you do like music, like you see when you play like the tracks on the computer or like on the DJ thing, and you see like the music goes like, this is like a kick, okay, and this is a snare, right? And it's a kick, right? It's like a wave, like the music wave. Okay, so this is the same. And so what it means is that basically the market has to recover from what just happened. It's a shock. When it goes up, it's a shock. When it goes down, it's a shock. You shock the market, and then it needs to do this to absorb the price, to to be fine, to be confident with the new price. Okay, so what happened here? For example, you have it all the time, right? You have it everywhere. It's only waves, and each time frame is a different wave. So here you have one. I'll just look at the last one here. This was actually a very long wave. It's usually not that long. And so, but you see, if you zoom in, you see it again, right? Look at this. Here we have a crash and we have a wave. And now we decided, okay, that was the bottom. I'm gonna go up. You go up, mini wave, go up more, mini wave, go back down, mini wave, go up more, mini wave, go all the way down, and boom, up, wave. When there is no wave, like this one, because I know you're gonna tell me, when there is no wave, we call it, a special case, we call it V recovery. Okay, this is V recovery. You have it for like here. This is the COVID crash. COVID crash, V recovery. Tiny wave, but you know, V recovery. Okay, not a wave like Z. V recovery. Here, wave. You see the wave? So I want you, this is the second exercise. I want you to look at the charts that you're gonna do the support resistance that we talk about. And I also want you to analyze and observe the waves. You see the waves. Okay? And then up, and then wave. And then down, and then wave. And then up, wave. And then you understand, up more. So, and then here down and wave. It's always waves. Okay? Here, waves. Everywhere you look, if it's not going up or down, in between it's doing waves. Sometimes it's doing down, wave, down. Yeah? Sometimes it's doing down, wave, up. Yeah? Sometimes it's doing up, wave, up, wave, up. Okay? And here, up, wave, up, wave, up, wave. And then up, and then wave. Okay? Very simple. So now, just because I give you a little...
Now down. Now big down.
Well, it's wave. Yeah, exactly. Wave, down. Okay, down here. Big down, 14% down. Wave now. Wave because we're shocked that we went down. We need to absorb and understand. Down. Okay, so why do we do waves? I can tell you why we do waves. We do waves because basically it's a place where people exchange. So people buy here. Let's say people buy here. And then it goes up here. And they look. And they're like, oh, I bought 26. Now it's 69. And so we spend time here. And people who think this is a wave before down, they sell here. And people who say, hey, this is a wave before up more, they buy here. So that's why we have wave. Wave are places where people exchange, where people trade, where people, where they change hands. The people who bought Bitcoin here, they give the Bitcoin to the people who want to buy here if they want to sell. Okay? So that's why you have waves. And so in between waves, you have what we call markup or pump. We like the pump. Okay? So markup is, this is a markup. You see? This is a markup. This is a markup. Okay? Basically everything that's not a wave. Markup, wave, markup, wave, markup, wave. Okay? And we go up when the markup is not challenged. You see? This markup, we never came back. For example, here, markup. Okay, even big markup. We go up, another markup. You know, there's a little wave here. We discussed the $20,000 wave. So markup, wave, up, we come back, we retest, support. You see here the support? Perfect support. And then markup, wave, markup, right? And then down, and then here, wave, and then down, and then 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 wave, and then up. Okay? So you don't want to buy or you don't want to sell during the markup and the markdown. You want to trade during the exchange, during the waves. And the idea, I don't want to go too deep in the details, but the idea is that, hey, what is going up is going to keep going up. So you want to buy the bottom of the wave, where is the most scary. And what is going down is going to keep going down. So you don't want to buy the dip because you're going to cut your hand. If you knife catch, you knife the catch. What happens if you try to catch a knife that's falling? You're going to hurt yourself. Okay? But remember, if you zoom out, Bitcoin is only up. Remember? If you zoom out, Tesla, Microsoft, Apple, only up. Okay? So you don't want to catch the knife here, but it's still something you want to buy. So you just want to buy not too early. So now let's finish talking about the waves. These waves, I said, we call them flags. Okay? So when you go up and you have a wave and then you go up more, the bullish flag, and a bullish flag goes down. It goes down before it goes up more. Okay? The opposite is true. When you go down, then you have there, and you go down more. There is called a bearish flag. Okay? A bear flag. And you have to identify them. Okay? And this is very, very a good trick because look at what we have here. You go up, and you have a flag that goes down. So you know, hey, maybe we're gonna go up more. If this is not the top, right? If this is not the top and we go to 0, you want to buy the bottom of the flag. It's okay, be patient.
So after you see the flag goes down and you start to seeing people buying, that's your indicator to go in.
Yes, it depends your risk profile. You know, some people are you don't want to buy some of these candles. Like I said, you don't want to buy the markup. Okay, this is FOMO. You don't want to buy the FOMO. FOMO, if you have FOMO, go on the chart, put a point, you come here, you take the line, you can even take the cross. You have a cross here, cross line. It says, hey, I'm Danny, I had FOMO here. And now you have a cross. Okay? And you come back and you see what happens. Okay? We'll see what happens. Usually, when you have FOMO, the price always come back. Always. So here you say, if you buy here, okay, you buy at 33. Okay, maybe you were right, because next week we're at 41. But guess what? Now we're at 28 and you're fucked. Okay, so some people wait for their flag. And then if you're very, very confident and you had FOMO, and you still want it, maybe you change your mind in the meantime, because maybe the CEO died. And if the CEO died, the fundamental changed. Or maybe now you have the tariff and the fundamental change. Okay, but if the fundamental didn't change, and you only bought it because of the price, you wait for the dip and you buy here. You can buy here. This is the best. Or you can also buy here. But here, you're not buying the top of a pump. You're buying the break of the flag. You understand the difference between buying at 38,000 here, it's better than buying at 32,000 here. You understand? Say yes.
Yes.
Good. So now you buy here, and now you have all of this. Now another trick I'm giving you. Bitcoin is going up, is going up, is going up. But now what do you have? You have a flag. Wait. It's a flag going up, which means it's a bear flag. Yeah? A bear flag is bad. Break down, retest the bear flag, dead. Minus 20, and then the next day minus 25. You lost 55% of your money in 2 weeks. And you had it on the chart. Bear flag. We said, when you go up, the flag has to go down. And then you go up. Okay? Here what happened? We went up. Here we had the flag going down. Tov. We go up more. Now we have the flag going up. Okay, what's the flag going up? The flag going up is bear flag. Right? So the top was a bear flag. And then what happened? We crash. Here what do we have? Bull flag. We go back up. Here do we have? Bull flag. We go back up. Here what do we have? Bear flag. We go down.
Okay. Wow, that's amazing.
Good. I'm glad you like it. Here what do you have? Bear flag. We go down. Here what do we have? Ooh, now you want to zoom in. You can zoom in. Or what do we have here? Bull flag. After a bear flag. Okay, I'm gonna teach you a lot of things later. I'm gonna give you a lot of tricks. But now you can see it. I want you to practice that. And sometimes the flag is just a rectangle. And rectangle usually means continuation. So up, rectangle, up. Now I want to leave you with one last notion before we close the call. I want you to understand that now we are not talking about fundamentals. The fundamental, we assume Bitcoin is the future, Bitcoin is good, on the 12 years is up only. You think you're gonna be the guy who is gonna find the top of something that's been going up for 12 years? It means 12 years, it means it's been going up for 5,000 days. Right? It's been going up for 5,000 days. You think you're gonna wake up one day and be the guy, oh, I know today is the day. Your odds are very low. Maybe you're a genius, and call me if you are, because we can make money. But usually, you don't want to bet against the trend, especially not Bitcoin, because Bitcoin is the thing that went up the most in the last 12 years. It's the fastest horse on the horse track. Okay, if you look at Bitcoin, now I want you to teach you a little trick. Here on TradingView, you see Bitcoin, but you can make equation. You can do Bitcoin times 10. You can do math. Okay, now you have Bitcoin with 10 times more the price here. Why? You can do whatever you want. I don't tell you why. But you can also do divisions. Or you can also do, for instance, division against the Nasdaq. And now you see Bitcoin just is going up against the Nasdaq. The Nasdaq is basically all the tech stock in America, Google, Microsoft, everything. Now this is the chart not of Bitcoin against the dollar, right? Fuck. This is not Bitcoin against the dollar. This is Bitcoin divided by the Nasdaq. So this is Bitcoin against the Nasdaq. So it tells you it's better to have Bitcoin than the Nasdaq. Okay? And why? Well, either Bitcoin goes up or Nasdaq goes down. This is a fraction. This is very basic maths from like when you were 11 years old, right? When you buy a shawarma, you buy a shawarma with your shekels. The shawarma is 50 shekel, you spend 50 shekels. It's shawarma divided by shekels, okay? If now the shawarma is 100 shekel, maybe the shawarma went up, maybe the shekel went down, okay? It's a division. X divided by Y. How do you make this go up? You make this go up if this goes up or if this goes down. When Bitcoin goes up, maybe Bitcoin goes up, maybe the dollar goes down. Okay? It's your purchasing power, right? When they print all the money, they print money like no tomorrow. Like in the last 5 years, they print 80% of all the money of the last 200 years in the last 5 years. They printed so much more money. So if you have $1,000 in your pocket and there is $1 billion in the universe, you have a ratio. But now if you have still $1,000 in your pocket, but there is $100 billion in the universe, your slice of the pizza, your khatir, went down. You have a smaller slice, okay? And in this case, maybe Bitcoin didn't go up. Maybe it's just stable. But the dollar goes down because they print so much. You understand? So sometimes it's the one on the top goes up, sometimes the one on the bottom goes down, and sometimes both. Maybe Bitcoin goes up and the dollar goes down. So now that's why you have this kind of stuff. Here, obviously, look at this. Obviously, the Nasdaq by itself, except today,
I bought QQQ on not long time ago, and I think now I'm losing.
Yeah, you're probably losing. So right now you can see that QQQ usually goes up, right? Over again, if I go on the 12 months, usually goes up. The trend is good. Okay. Oh, look, maybe here we have soon a support resistance flip. You see it? Maybe. Who knows? Who knows? So Nasdaq goes up, right? Like this is a good chart. Like you want this. You want to buy this at 29 and then you're happy at 500, right? So Nasdaq goes up. But if you do Bitcoin divided by Nasdaq, Bitcoin goes up. So it tells you it's going up even more than the Nasdaq, even though the Nasdaq goes up. So Bitcoin is like Nasdaq on steroids. Right? Crazy, right? So you can play with this and you can do what we call synthetic pairs. So for example, what I did recently, I'm just giving you a personal example, is I like Tesla. Everybody knows I love Tesla as a stock. So Tesla went up. Okay, I want some Tesla. And Palantir went up a lot also, right? I bought it like around here. And now I was like, okay, I think it's overvalued. I sold around here. And I was thinking, what should I buy with the money? Should I buy back the Palantir now that it crashed? And maybe, you know, I don't want to bet against the trend. Unless this was the top. And sometimes there is a top, right? Every 2 years there is a top. Maybe this is the time for this to top, right? Especially when you have what we call like this, a wick. Okay, so just to make sure you understand the basic, remember we talked about the candle. The candle is here. If it's a candle that goes up, okay? This is where it opened. This is where it closed. I'm repeating. But now, sometimes you do have wicks like this, like Z, right? Or like on the bottom. The wicks, just to make sure you understand what it is the price is a price that has been visited during that month. So maybe you open here, you go all the way here, and then you close here. So we have to show you that you went here, even though you closed here. Okay? Or maybe you open here, you crash, but then you go up, and then you go all the way up here, and then you close here. So that's what it is. The price that we touched within the candle, outside of the, you know, because we closed green, we show you this, but we closed here. But we went there just at the first week, maybe. Okay? So that's what the wick is. So sometime when you have wicks like this one, this is a very, very big wick. It's not good. We call it rejection. Price have been heavily rejected. Everybody who had the stock sold it, all of this. They sold it, and then again they sold it here, another week. And then it goes down. Everybody sells here. Everybody wants to sell. So anyway, what I did was like, hey, maybe which one do I prefer now if I have money? Should I buy Palantir or Tesla? Then you can do Palantir against Tesla. And what do you see? You see Palantir was way better than Tesla. If you had Palantir instead of Tesla, you made 15 times more money over the last 2 years since 2022, right? I don't know how much money you made, but you made 15 times more. Hey, maybe they both went down, right? You remember the ratio. Maybe they both went down, but Palantir went down way less. So it will look like it went up. You understand? Yeah, no. If together, if they both go down, but one goes down less, it will look like this also. So any case, now I'm like, okay, what should I buy? I think Palantir went a lot against Tesla, and maybe that was also a top. Who knows? Maybe Palantir is gonna keep going up against Tesla, and now you should look like it like this. You know, maybe this is gonna be some sort of flag, and then we're gonna have some price, and then maybe we go up, or maybe that was the top, and maybe it goes like this and like this. So that's something you can play with to decide what do you want to buy. You can trade them against each other. You know, that's a good thing. But let's go back to Bitcoin. Right now, you see Bitcoin against Nasdaq. What do you see? Here. Line here. Boom. This line, right? Bull here, what do you see? We went down, we went up, and then we go down. This is a bull flag. Right? Bull flag. Break the bull flag. We hold the line. We go up. This is another bull flag. Right? And then what do you see here on the bull flag? This top. Boom, we hold it. And then again, what do you see here? This top. Then we hold it. Okay? You see this support resistance? Here. This top. We hold it. Okay? And so I think we did a lot today. We did the moving average. We did the support resistance. We did the bull flag and the bear flag. We did the regular chart or the logarithmic chart. And we did the time frames, right? The different time frames. And we did the understanding of the ratios and the synthetic pairs. Ken? Anyone has
Good.
a question, or should we? I think we should stop now. It's been almost an hour.
Yeah, one last question.
Been,
Do you have an option to put a stop loss on Bitcoin or only on stocks?
No, you also have on the exchanges. You can put stop losses.
Mm.
Okay, so I'm gonna stop the recording.